Good afternoon, everyone. Today is the 18th day of April, 2013. Let's see, results. We ended the morning session plus 23 ticks on the Russell, minus 6 ticks on crude oil. Excuse me. It took 5 trades and 63 minutes to get our 2 points, or 2 points equivalent this morning. When I say 2 points, what I mean is $100 a contract. It took 63 minutes and 5 trades to get there this morning. We ended up about $170 a contract, but in 8 trades. That is how we ended the morning session. If you have not taken a free trial with us, you should go to www.cfrn.net/apply, sign up for the free trial. In the free trial, you get 5 days in our live trading room, 5 days of access to everything you see here. You'll be sent an email with a great new video in it, an updated video that shows how to download the DT Pro charting platform, and also shows how to install the CFRN indicator set. Okay. Once you've got all that done, if you want to just grab my layout, just send me a quick email. Say, could I please have your layout? You don't even have to say please. You can say, just send me your layout, and I'll send you my layout. So your charts can look just like mine without a whole bunch of work. Okay? Not that it's a bunch of work anyway, but your charts will look just like mine once you load it up. You have to remember to save your layout. To save your layout, you go to the control panel, then view, layout, and save. Okay? That's how you do that. Let's see. Let's see. Sorry. That's it. All right. For everyone who is a partner, just a reminder, Dwayne already said this, but there's a partners meeting tonight. If you are not a partner and you want to become a partner to get into that partners meeting, then you need to take care of the email. The information is in the email that I had sent to you. If you do not have that email and you want to get that email, you need to send us a quick email. That's support@cfrn.net with the text partner info in it, and we'll send you off the partner info as soon as possible so we can get you into that partners meeting tonight. All right. Now, let's go over the trades. Again, I didn't trade gold. Well, not in the room so everybody could see. I didn't trade gold. I took 1 trade on soybeans. I'm sorry, I didn't take any trades on soybeans. I took 1 trade on natural gas. I took 3 trades on crude, and I took 4 trades on the Russell. So let's go over those trades. All right. My very first trade, I believe, was in here on crude oil. Okay. Yeah. Let's scroll back to it. Here it was. My very first trade was right here on crude. In this one right here, I had shorted right here. This was actually, the entry should have been up here. I should have shorted up here at 87.20. I made a mistake on this entry. I moved my stop up to plus a couple of ticks once it started moving down, and it came back up and it took me out. Once I realized I had made a mistake, and I entered 4 ticks off of where I should have entered. I moved my stop up to lock in profit right away. It took me out, and then it moved down. I could have got my 2 points in here in the first 10 minutes like I normally do. Well, can't say like I normally do, but I could have gotten my 2 points equivalent right here quickly. Then I took another short right here. That stopped me out for minus 8 ticks. So at this point here, I was minus 6 ticks. There were a ton of opportunities in here. You can see them all. I was not watching crude oil when all this was happening. Otherwise, I would have been taking some trades in there. But there was a shorting opportunity in here, a long opportunity in here, nothing in there. Short here. Was there a short up here? There wasn't really any divergence in there. There was a short opportunity right here that probably would have stopped you out, depending where you get into it. But as it was moving down, there were plenty of opportunities to short this market on the way down. You can look down here and see where the divergences are. You see all these little divergence scenarios where the green line is moving away from the red and blue line. The green line is moving away from the red and blue line. The green line is moving away from the red and blue line. Whenever you have one of those situations, you'll be looking at the price when it's happening. You'll be drawing a trend line up the bottom of the price, up the bottom. Then right here, where you get a close below the trend line, you look down, see if there's divergence. If there is, you enter. Right here, you see, drawing a trend line up the bottom. I'm not actually drawing the trend line, I'm just eyeballing the trend line. But if you're drawing a trend line up the bottoms as the bottoms are being created, Right here you see it close down below the trend line. You look down here, see if there's divergence. There is, you enter. Simple as that. Alright. It happened again and again and again and again and again. I unfortunately was not trading a whole bunch of crude this morning, and I missed all this. I did take 3 trades on crude. I took those couple that you saw earlier, those 2. And there's another one over here that I took right in here. I got short, and I believe this stopped me out from minus a tick. You know what? There might have been one more trade on crude that I took somewhere. There had to have been, because I was minus 6. Alright, so let me just update the spreadsheet, because I took one more trade on crude. As far as the spreadsheet goes, I guess I skipped over that. So far in the month of April, we've taken 130 trades. We are plus $3,385 a contract in the month of April. That's in the live trading room alone, and that's not counting the 2 days that I took off, the 16th and 15th, where I did not work. Not work in the live trading room anyway. Excuse me. If you assume an $8 round turn commission, which is high, it should be higher than any commission that anybody in here pays. If it's not, then you guys need to get a different broker, or at least have a word with your current broker. But I assume an $8 round turn for the 130 trades. That still leaves us with plus $2,345 net after all the trades in the live trading room so far for the month of April. That's per contract. Okay. Let's see. So I've updated that. That's proper. We had an opportunity in here to get long, another opportunity in here to continue the long. That probably would have stopped you out right there. It put in a higher swing. You could have gotten long again right in here. You could have gotten long again in there. There are just a ton of opportunities here. The crude oil and the gold both had a bunch of opportunities. Going to go over the Russell right now. The Russell is the next one over, and I took a few trades in the Russell this morning, and I did pretty well. We're plus 23 ticks on the Russell. I missed a whole bunch of things in the Russell. I missed a whole bunch of them. You can see in here. Now, on this move down right here in the beginning, I don't remember what I was looking at, but it wasn't the Russell, and I wish I was looking at the Russell, because we would definitely have had our 2 points equivalent right in here. Okay, it would have been easy for us to get our 2 points equivalent right in there. The down close below the trend line with the bearish divergence right there is where we would have shorted. 903.8. It dropped all the way down there. The next opportunity was right here. Divergence again. A close down below the trend line. 901.7. It dropped all the way down here. It's pretty straightforward and easy when you look at it that way. All right. The next trade right here would have stopped you out had you taken the trade. Okay, that would have stopped you out. You would have given back 8 ticks of this. If you hadn't made enough here to quit for the day in the first 10 minutes, then you would have been given some of it back right there. You would have gotten it back right here, and then some. Another opportunity to get it back there and there. And over here is finally where I took my first trade. I shorted here, and I believe I took 10 ticks profit on this trade. I missed the initial opportunity, which was right there, and I grabbed the second one right here. I took profit on that. I missed this one right here. All right, there was more opportunity right there. Another one right in here. I missed all this. So let's just stop for a moment here. This is the first half an hour, this period right here that you see on the screen. All right, if we were to short a down close below right here, 903.8, it dropped all the way down to 901.6. That's 22 ticks. If we were to short right here at 901.7, that dropped all the way down here to 900.1. That's 16 ticks. That's, what, 38 ticks right there? $380 a contract. If you max them both out, let's say you get 10 ticks out of each, you're up $200. You give back right here 8 ticks, you're up 120. Right here you get another 8, you're back up 220 right now. Right here you get 8. Just combine these two. You say you get 8 right there. Now you're up 300. Over here you grab the first one, you get 8. You're up 380. Or yeah, let's just say you get 8. You're up 380. Over here we'll say you get 10, 8 or 10. I should have just stuck to 10 the whole time, but over here we'll say you get 8. Now you're up. What did I say over here? Where was I? 320, I think. Over here you're up 400, 480, 560. And right here is another 8, we'll say. That's what, 640? And just combine these two for another 8. And that's $620 in the first half an hour. Does that happen every day? Well, no, it does not. Is it as easy as it looks right here? Well, it can be, but not necessarily. The slippage on the Russell is surprisingly small, really. You know, I slipped a tick twice today. 1 tick. That's right. And Anthony said that's if you can get in on those. And that's true. You may not have been able to get in on some of these. The alternative thing that I've been doing when I see that there's a lot of momentum like this, instead of trying to buy right here at 903.8, I would buy 903.7. I mean, I'd sell, not buy. Sorry, I'd sell 903.7 instead of trying to sell 903.8. When I know the bar is going to close down here. Yes, Anthony, I got your email. When I know the bar is going to close down here at 903.8, I would try to sell 903.7 if I saw there was so much momentum in the market. Same thing down here. Instead of selling 901.7, I would try to sell 901.6 instead. Just wait for the bar to close, or even just put a sell stop on there. Okay. That was the Russell this morning. That's all we did on the Russell. Well, actually, no, we took another trade over here. We got some profit on it. Took another trade over here, and we got some profit on it. And I think that was all we did on the Russell. There were some more trades in there. You know, there was another one in here, another one in here. Is there one in here that I missed? Questionable right there. There's just a tiny pull away right there. But you know, as the thing moved on, after the live trading room closed this morning, there was another trade right there. There was another trade right there. There was another trade right here and right here for all those moves down, right, to capture all that on the way down, little pieces at a time. Right now, though, look at this. This thing is consolidating in a box. I wouldn't want to trade it. That is the Russell. We didn't do anything on gold. I'm not even going to show you the gold. On the NQ, I pointed out a couple of trades on the NQ. I didn't take any trades on the NQ, but I pointed out a couple. Just go back. I think one of them lost and one of them won, the ones that I pointed out. I pointed out a long right here. That moved up pretty nicely. And a long over here. Okay. A short over here that didn't really go anywhere. Went down a couple of points, I guess. A long over here that moved up nicely. I thought there was one that I pointed out that didn't go at all. I guess not. Oh, that might have been on natural gas. Anyway, the NQ had a lot of nice trades today, using the same exact trade setup, the same exact indicators, the same stop, the same everything. Okay, if you're new in here, the one thing you should take away from this is that we're using the same indicators, the same time frame, the same setups, the same stops, the same everything across every single one of these markets. You know, it may look like I'm just jumping through a whole bunch of markets and there's a whole bunch of red and blue blur going by, but what you should take away from it is that we're using the same exact stuff over and over and over and over and over again, regardless of the market. We're using the same things. Okay, these are soybeans right here. Soybeans didn't have anything for us this morning, unfortunately. After the close of the morning session, or actually right before the close of the morning session, the soybeans really started to tank, and there was an opportunity in here to short. You can see I'm drawing the trend line the same way that I did on the Russell and on the crude oil and everything else, looking for the same type of divergence right here. And the down close below the trend line is right there on the soybeans. Okay, that's what you look for. Right now you have a bullish cross, a pull away from the BBC, a test of the BBC, and an up close. So right there on the soybeans for the long trade. Okay. Natural gas inventories came out this morning, and there was one trade that we took over here on the natural gas right here. We got short the natural gas right here. Now, when I got short the natural gas, I had accidentally left my slingshot settings to on. My slingshot tick-by-tick update setting is what I mean. It was on, and it looked like there was divergence, and there wasn't actually divergence, and I got short thinking there was divergence. And when I realized I had it on, I shut it off, and I saw there was no divergence, so I got out of the trade. Okay, fortunately I got out of break even before it stopped me out. This, I think, might have been the trade that I was talking about earlier when I said on an up close. When I said on an up close, it would have been a long trade right here, and it pulled back just enough to stop it out and then went up. That wasn't the one that I was talking about earlier, but that did happen this morning. It pulled back just far enough to stop it out, and I didn't take the trade. I just pointed it out. Do I use a hard stop? Yes, I use an 8-tick stop on every single trade. Unless I accidentally have a 10-tick stop on. But my DOMs are all set now to an 8-tick stop. All right, all my DOMs use an 8-tick stop on every single trade, every single market, every single trade. Okay, it's always a hard stop. And let's see. Let's see. Okay. And that's pretty much it. I didn't take any of the trades in here anywhere. So we ended the morning plus 23 ticks on the Russell, minus 6 ticks on crude. And our results for the month so far are like this. Plus 33.85 per contract, $3,385 per contract on all the markets put together for the month of April. Okay. And that is in how many trading days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trading days. Okay. That is where it stands. So with that, can I say what my target is? Is it always a fixed target? Well, that's a good question. I don't typically have a target. Okay. Unless I'm just going to get my 2 points, to start out the day, where I might put a target on at 2 points just to get my 2 points. Typically, I don't have a target on at all. I'll put the trade on and I exit the trade with a trailing stop. Okay, so that allows us to get into some of the huge runs, like what just happened over here on crude oil. Like right here on crude, if I had like a 10-tick bracket on, we'll say, or an 8-tick bracket, the up close right here was the entry. Okay, so you would have been looking to enter right there. Give or take 1 tick, 87.73, 87.74, right about there. It ran all the way up to 87.98. Now, if I had an 8-tick bracket on, we'll say, my stop would have been down here, and my target would have been right about here. So we left all that on the table. Like right now, for instance, on crude oil. It's pulling back up to test the BBC. We have bearish divergence. There's your bearish divergence right there. So all you would look for right now is a down close. As long as the cycle stays red, you'd look for a down close of the current bar. It's got a high of 87.82. It's going to have a low of 87.78 if it's going to close down. It's got the full range of the 4-tick bar right there. So if it's going to close down, it didn't. This current bar it's our last chance to enter this trade on the short side. Okay, I don't think it's going to happen. I think it's going to keep going up. But it's our last chance to enter the trade on the short side because the black line right here is crossing above the BBC. There. Okay, it did go up. Now you see how it's whipping back and forth across the BBC right here? That's bad news. You don't want to trade when it's whipping back and forth like that. Okay? But that's it. Does it matter if the black line is on to trade this method? Yes, it does matter. And I just showed you about the black line, how to use it. If the black line crosses above the BBC when you're looking to go short, then you stop looking to go short. Okay? So Rick, you heard, I answered your question, right? I trail my stop is how I exit the trades. I don't typically put a target on. I put a stop on. Okay, and I just drag the stop up behind it. I manually drag the stop up. How do I drag the stop up, you might ask? The first thing that I do is I look for a close above the MA1, like this right here, then I'll bring my stop to break even. Or I look for 4 ticks profit in the trade. Either one, whichever happens first, I bring my stop to break even. After that, I just trail it up as price moves up. You know, if it moves up 8 ticks or 10 ticks, I might lock in 5 ticks. And I trail it up. It works out, so it's pretty much trailing up behind the black line in the MA1. Okay? That's how it usually works out. You know, in this trade right here, I might have gotten out right here. Right here where it pulled back this much. Okay, as opposed to like right here, which would have been an 8-tick target. I might have gotten out over here, which might be 10 or 12 ticks instead. Okay. All right. Well, that was certainly more in depth than I usually go, but that's all good. Natural gas just moved up. We had bullish divergence to close above the trend line. It moved up nicely. It's got divergence again. It's got a little trend line again. Little trend line is right there. That's it. I'm gonna stop the recording here. If you guys want to get into the partners meeting tonight, you need to become a partner. If you are a partner, just a reminder, there is a partners meeting tonight at 9 p.m. If you don't know what it takes to become a partner, then just send me an email and ask, and I will tell you what it takes to become a partner. You see this one over here? I said we needed the up close above that trend line, right there. We had the bullish divergence. Now the green line's gotten up into the cycle, so you expect to pull back. All right, that right there was 4.400, and it went up to 4.409. That's $90 a contract right there. All right, that's it. I'm going to stop the recording.